Type 9.
What is going on, guys? Welcome into another pre-market live stream here with the Everyday Growth Advisors. I hope you're having a good morning or a good evening wherever you are. Welcome. Hope you guys had a good weekend. Definitely a interesting week ahead here with a possible rejection on the S&P 500 at the 4150, as we had previously mentioned on the newsletter. Let's get through the pre-market rundown here and go through what has changed in the macro, and then we'll get into the technicals to confirm and get this week going. I hope you guys are ready for a new week. Let's make some money together, and yeah. So from the macro perspective, it's only mainly three things that we're focusing on. The first thing being forward EPS growth for the S&P 500 that has just gone negative. For the first time since 2020, obviously this was a lag effect because of the coronavirus crisis, and then before that 2015, and then before that 2008. And this has only happened 4 times before, so it is a pretty significant event. Even though we've had companies pretty resilient in this market environment, we continue to see EPS forward guidance kind of dwindle down here as the market tries to figure out what the effects of inflation are on the economy. It's going to be interesting to see where this goes in the next couple of weeks. So, I think that it's an important thing to point out at this point that monetary policy from last week is still pretty hawkish or restrictive. I think that, as the Fed continues on with the job numbers that got posted on Friday, it's just going to be a pretty difficult approach which they have to take in order to control things. As we have read the newsletter, I think you would know what our stance is on this. We still feel that there will be a pullback in the interim, and if you feel like you've lost out on this rally or you didn't catch part of it, please don't worry. This wave is gonna definitely come back either to 40.60 or 39.40 for a retest. So I think that you'll have another opportunity at this little birth of a bull market, if that is so, and if indeed we see the market push up the way that we think it's going to push up. So we are looking for pullbacks here. So let's jump into the technicals to kind of figure this out. So last week, and really honestly the week before that. We've been looking at 4150 as the major key retest level for the S&P 500. We got there last week on Thursday, and on Friday we kind of breached it and then rejected, forming kind of a top tweezer pattern in some ways on the daily. Not a perfect tweezer, but nonetheless looks like a tweezer. And what looks like a tweezer, feels like a tweezer, is a tweezer. So we might see a temporary pullback wave here, perhaps sometime this week. Not sure if it's going to be today or tomorrow or anytime, this coming week, but there will definitely be a little bit of a pullback. And that pullback is going to give us a lot of understanding on where this market's going to go. The first level for a pullback we're looking at is going to be 4060. That's going to be a key level here on the S&P 500. And then the second level is going to be 3940 back into this demand zone. And that will also retest this trend line, which has been, past support here and then resistance. So this trend line might be one of the spots that we're aiming for, which would be around 3940. And we'll be looking for this key level retest on the S&P 500 sometime in the next 1 to 2 weeks. We don't know exactly when we'll get there because we could, we could chop here for a little bit and then go there. That could be the case. But we are seeing pockets of liquidity dry up here as we further try to go up here. Remember, guys, that when everybody's buying and no one's selling, it creates a very lopsided market. And it doesn't exactly create the best environment for a bull market to run indefinitely. So we need more liquidity, and the only way to get that liquidity, or rather for market makers to get that liquidity, is to create a shake-up, downside movement of some kind, to shake out all the weekends that are long, and all the retail traders who are late to the party, who are trying to chase the FOMO from last week. So heading into this week, we want to take a more conservative stance to make sure that we are not part of that party that is going to try and chase this to the upside, rather make educated and probabilistic bets based on where the risk to reward ratio is. Now, if you look at the upside risk to reward ratio from where we are, up into the 4200 versus all of this risk down here, you're going to get roughly a 1 is to less than 1, maybe like 0.9 risk to reward ratio. And the upside here is not that great, in my opinion, in terms of risk to reward ratio. But the downside is decent if you keep your risk off at around 4200. So you have roughly like a 100-point stop loss, and then you have about 200 points, or rather 150 points of take profit on the downside. So the risk to reward ratio on the S&P 500 is slightly skewed to the downside in terms of favor, and I still think that that's a more significant risk to reward ratio structure than the upside. So for me personally, I won't be trying to chase this to the upside here. I would rather want to wait for a pullback. I don't really like the downside necessarily neither. It's just a matter of preference and how you're going to align with your own risk tolerance. But personally, I don't like chasing things because I don't like overpaying for them. Moving on to the NASDAQ here, we also have a similar looking chart on NASDAQ. Of course, as I mentioned last week, we needed to come to that 12,780 level to retest, and we perfectly rejected at the key pivot for the bulls, right? And right as we come into this level, we got a rejection, and not exactly, once again, a perfect tweezer, but does look tweezer-ish. Now, the retest for the NASDAQ is going to be 12,100 for the first retest. That's going to be either here, or the second retest will be 11,700, which will be down there, back into the dual zone, which is the chop zone as well. So that could be back into chop zone, or we could kind of move sideways here and then decide where we want to go in the interim. So I wouldn't really go short unless we start breaking 12,350 or so, a little below where we are right now. And once we get below there, then I might be a little comfortable, take some short positions, apply some risk for some intraday trades, not really for swing trades. I don't think this is really a market that you can swing aggressively. But if you do swing aggressively, then make sure that you are keeping your risk pretty tight. Okay. The other one that is definitely sensible in terms of risk to reward ratio structure is IWM. And we have seen very, very relentless push on this one. Small mid caps, Russell 2000. The key pivot for bulls was 201. We didn't even get there last week. We kind of rejected a little, just a little shy of it at around 199. And we'll be looking for this continuation to the downside. First test will be at 192. Second test will be at 186 for these two key levels here. that would be looking at IWM. So I guess I would only be comfortable taking this one if we get an aggressive sell-off at the market open or throughout the entire day. Then I'll be happy with taking a little bit of downside on this. Risk to reward ratio wise, this is the best among all three of them, in my opinion. IWM has the best risk to reward ratio structure amongst all three of these trades. The VIX is just very, very slightly up here, not really a heart attack amount, but just a slight elevated level this morning. Nothing to be really concerned about, but we are still in those lower levels at 16, 18, and 21, so really no alarms to be raised just yet. What is more important and what I'm looking at is the bond market. And the bond market here has not moved in response to employment numbers. Well, it kind of moved on employment numbers. It had a gap down. And so yields are slightly up. And then at the same time, you have the dollar index, which is spiking here pre-market, which is going to add more pressure to the equity market. As you guys know, this causes higher pressure on discount rates, which will bring valuations of tech stocks in particular that are more sensitive and higher beta down. At the same time, these yields, they are showing that the bond market is calling the Fed's bluff out on whether they think inflation is over. And so this sell-off of bonds are pretty much mimicking that the bond market thinks that the Fed is not done with QT, and therefore, they feel like perhaps the Fed still has work to do. So the bond market not really moving in the direction that we see until and unless we see a nice bounce here and then a continued reclaim of 110 or 109 pretty much. I think that the bond market's really telling a different story here, and it's something that we should be watching very closely. I've mentioned this many times before. When the bond market sniffs, the entire market catches a cold. So you got to keep track of that. Dollar index really aggressive this morning. Pretty nice moves, and obviously this is a pullback here, so it's going to create pressure on the equity market. And we'll continue to watch this closely as the the day continues here. This is going to put pressure downward on the S&P 500 and dollar-denominated assets in general. Gold is one of them, which has been sold off pretty aggressively as of last week with the exhaustion gap, a big exhaustion gap, mind you. And we're looking for a continued downside here if we can get that move below 173 or so on gold. Be happy to take a short trade for continued risk off. Also been watching financials after a bullish breakout last week and consolidation above this level. Hasn't really been able to break above 37 just yet, but I would like to take XLF above 37 bucks if we can get a bullish movement there. But as of right now, no real developments here, and it could, might as well get rejected and then fall back into this channel here, which would set it up for a more broader fall later. If you guys have any charts or you need me to break anything down, go ahead, put it in the comments right now so I can get to it. But that's all I have in terms of technicals and macro update. I hope that was helpful. If that was helpful, make sure you take a second out of your day and smash the like button and subscribe if this is your first time here. We love hearing from you guys and appreciate you taking your time out to be here. So yeah, Tesla. Okay. Crazy amount of unusual options activity on Tesla last week. Okay. We had a bunch of people buying $200 calls that were expiring last week. I think it almost got there, but then ended up selling off. So we are seeing continued flow on Tesla for the $200 level, and then out the money to I've seen flow up to 210, 220, 230 last week. There is a possibility, obviously, of a breakout at around $200, and if we do get that breakout, I'll be watching this very closely for a retest for that upside play on Tesla. But however, right now, I think that this has a little bit of mean reversion to do back down, either to 180 or 162 pretty much. So I'll be looking for a rejection at this level here for that play down. If we get that downward move, then I would like to play the 180 puts first. And if we get to the 180 puts, I'm happy to take profits there and then play the 162 puts or 165 puts for that halfway move down, retest of this level here at around 167. I don't think we will get to 162, but it's definitely worth to take a stab at this for the downside play if we do get there. So upside break looking at 200 as a pivot, downside break looking at around, I want to say 187 even for that downside break and pivot down into 180. 180 below 180, we get that 165 or 170 puts to play this downside back to the mean reversion of this trend line here that we've been following for a while. So expecting this kind of a move down on Tesla for that bounce right around somewhere here. Of course, you can't time it perfectly, so best to use your best judgment in terms of risk to reward ratio to manage that and play either the upside or downside scenario. I hope that's helpful. Apple. So Apple, very aggressive move last week, even despite lackluster earnings. Definitely interesting here because I think that it has, obviously, if the indices lose their momentum and start to pull back, then Apple's also going to pull back along with it. We saw similar moves from the likes of Amazon and Google that after earnings they kind of performed poorly last week. We're hoping for that to spill over into Apple, and if that happens, then you're looking for that move to extend into other big tech like Microsoft. So look very closely at that. I think if the S&P 500 moves down, your key pivot point for Apple should be around 152.50. We're already at 152.85 here. I would like this gap to be filled. If the market opens up and we get a nice green candle to close that gap, I would be happy to see how that candle is going to close the first few 15-minute candles. If we get a nice little reversal candle, bearish engulfing, pin bar, doji continue with some bearish momentum candles, then I'd be happy to take, on the break of 152.50, perhaps some downside risk, and then go risk off, like around, I want to say 155, keep that risk tagged on, and play that all the way down into around 146 or 145. I know you're saying 120 puts for me. 120 is a little far. I personally don't like being so out of the money. But hey, I mean, if you are planning to go so out the money, make sure that you're ready to, hold through the pain. I mean, obviously, if you're holding 120 puts where we are right now, and it's pretty improbable, so a decent size move down would already give you really decent amount of gamma acceleration. But personally, I don't like the 120 strike. If you're really aiming for 120, here's a trick. If this is your target, you should always go midway to your target. So if you get your entry here at 152.50, midway through, you're looking at around a 136 or 138 put on Apple. And that will be more in line with a more strategic way to plan your trade. We teach this on the Everyday Go Advisors course. For those of you that don't know, we're already launched now with the new course, and you can check that out at our website, loancompoundgrow.com. So I highly recommend that if you're going to take a swing trade like this, don't go so out of the money, because there's a very low chance that it will give you a decent delta for your option. Just saying. NVDA, sure. Okay, so NVIDIA is one that I'm watching this week as well. Looks like pre-market's already broken below the key pivot. The key pivot was around 207.50. Looks like pre-market, it's already there. If we can continue with the downside momentum here on NVIDIA, I will be looking to take a short position if it pulls back sometime today. The only problem is the first retest level is going to be around 206. This is the previous resistance. That's going to possibly be a support. And if you get the bounce and then a retest, back test around 211, 212, followed by an extension, then I'd be happy to take this downside back into 190, which is going to become the next support level. So that's the downside trade that I'm looking at. The upside trade, I want to really plant a nice firm base around 214.50 or even 215 if possible. The bullish trade will only be above 215 firmly if it starts to really firm with some demand over here. Then I would be happy with taking upside on NVIDIA. But as of right now, I'm still slanted more towards a risk structure of a bearish trade along with the indices. So that's my bias. I'm putting it on the table so that you don't get it wrong. So I think if it moves back up sometime intraday for retrace back here, I'll be happy to see if it gets a rejection of some kind around this 211, 212 level, and then play that downside. I think 200 puts would be a good start, and then after 200 puts, if I can take some profits out of those, I'll probably plunk them into 190 puts if momentum really starts to take off there. Okay. BABA also nicely down this morning. I have some BABA puts, so it's down about 2.3%. That should pay nicely this morning. let's see here. Okay, Twilio, TWLO. Ugh, this is nasty. This is trying to reverse out of a very big downtrend. Let me see. Oh man. Oh man, I don't like this. Yeah, this is tough. I mean, you really need to clear over 80 bucks on this one if you want to see upside on this. Otherwise, it just keeps continue to falling. With Twilio, personally, I think you really want to, you know, this is really okay. Like, I mean, on the weekly chart, this obviously looks like the pivot for the trend line, and looks like it is kind of breaking out. So you're gonna need a confirmation here. I think you're gonna need this to really move aggressively to the upside above $80. This is your pivot here, around here, 81 or so. This right here, 81.50. 81.50 is where there's upside here. So I mean, if you're looking to play this interim to the upside, there might be the potential, but you know, this price action breakout so far is on low volume and pretty choppy. So it might take a little bit of time to get there. If you're playing a swing trade, it makes sense. Maybe go for 50 to 80 days out and then take the swing trade to the upside. But I think there will be a pullback before, because I think this is listed on the NASDAQ. Oh, it's NYSE. Well, similar. It's packaged software, so it will be affected by the NASDAQ. I think personally, you gotta wait this one out. Wait this one a little bit. Let it pull back. Try to pull back at around $56, $57. If you can get a bounce somewhere here, then I think playing the upside from here makes more sense. If you're planning to play the short trade, then wait for this to squeeze back into this and get below 57. 57 is going to be your key pivot here right now. So this right here is going to be your key pivot right here. Break below, rejection below gives you the downside. Bounce here gives you the upside. I think that's what you got to watch for on Twilio. 135 by the end of the month will get me in the money. I held this before earnings. Thanks. Okay. Okay, well, if that's the case, then I think you can, continue to hold it. I think if Apple accelerates to the downside, then you stand to gain a little bit of gamma on those contracts. So if you have them for me, then hold them for a little longer and see what happens. That would be my 2 cents, Rich. SEDG. Okay. Solar Edge. Oh, this looks like a nice bullish pattern, but is this more than meets the eye? Oh yeah, it is. So big consolidations here. Okay, so but the good news is this is a nice swing trade though. Okay, so let's have a look. You have this right here, this, and then you have pretty much this here. That's going to be your demand zone. Okay, that's a bit too bright. Let's get that a little less bright. Okay, and then let's get the supply zone going. You have this up here. Let's see. This. And then you have this right here. This is your supply zone. Okay. Okay, let's see how much of this has retraced. So you have this wave here. You have a pullback. Was this 50%? Let's see here. It was almost 50%, so not really. So you can't really use this wave. This is still a wave in motion. This is the wave. So you could see this wave instead. Let's have a look. So it looks like it's gone to retest 78 a couple of times, twice in fact. It looks like it's on a bearish path now. So it tried to get up here into the supply zone. It got rejected. Tried to climb again, got rejected. Third time got rejected again. This looks like it's going to come back down to retest 283, 285, this level here, if it breaks 305 below. So I think the key pivot here is going to be 305.50. 305.50 pivot to the downside. That's going to be a decent setup for risk reward ratio wise to the downside. Then you can go risk off at around 343 if you're looking for a swing trade. That's $30 to the upside risk, and then you have all of this to the downside, about $60. So that's about a 1:2 risk to reward ratio. That's not bad for a swing trade. If you're willing to put some money behind it, I think this could be a decent swing trade to the downside back into the demand zone. But it might take some time, so you have to buy a lot of time. And with the $300 stock, it might be expensive. Just my 2 cents on this. I think maybe playing a shorter term expiry would be a better move if you just wait for the break below 303 or so, and then get that confirmed downside move, play the pivot all the way down to 285, and then once you get to 285, you can lock in profits, let the rest run all the way down to around 262 down here. I think that would be a much better strategy than playing a swing trade in this market. That's my 2 cents with SEDG. But yeah, I agree with you. I think downside is a better profile in terms of risk to reward ratio. Just looking at this right now. AMD, similar situation to NVIDIA, but except for this one has been on a more of a bullish extension here than NVIDIA. It kind of this one has actually broken out. So if AMD, well, pre-market's already at 84, which means it's going to lose this. The key pivot here is going to be $83. If it gets below 83, that's the bearish extension, or rather rejection here to get bearish again. Below 83 would be the break of this candle here. That would mean retest of $80 first. So you could day trade that downside if you wanted to. If you want to play the upside, you'd have to wait for the break back above around $86 and then wait for the bounce, build a base around $86. Then it could probably take off and get up to around 93. And then 105 after that, 104, 105, somewhere around here to the upside. But I think pullback here is in order for us. So below 83, I think I would go $80 puts. And then if it really does slam hard below $80, then you could go for the 73.70. That would give you the gap fill at 75. Probably 75 puts is probably a better idea, in my opinion. So I would be looking at $80 puts first and then 75 puts for AMD if you want to play the downside. The upside requires bounce above 86, and then you could play $90 or you could play $100. Either one of those two. That would be the key levels for AMD. CVX. Oh yeah, this could be a double top, that's for sure. Be aware, it's a possible bounce as well. You don't want to get bearish until it gets below 166.73. So I would wait till this break here, 166 even. Give it like a buffer below 166. And then below 166, it could get possible rejection off this level, and then you can start taking the downside on it. I think that's a better chance for CVX there because it can bounce anytime. In fact, until 164, it's bounced even at 162 or 163 before. I think these are all significant levels that you got to keep track of in the past. So it might bounce anywhere in this zone here. So I think if it breaks below and then starts rejecting this level, that would be a smarter play. Watch for the break below and then a retest on the upside for a rejection, and then you can take the downside on CVX. That would be the way that I would play it personally, rather than playing it just guessing and saying, oh, it's gonna break or it's gonna do this or it's gonna do that. That's my 2 cents. All right, that's all I have for you guys. Any other questions? Thanks, guys. Thank you very much for attending, and thanks for the likes. For all 24 of you, I appreciate if you smash the like button one more time. And we'll see you back on Wednesday for another pre-market live stream here with the Everyday Growth Advisors. I hope that was helpful for you guys somewhat. And we'll see you back on Wednesday and break this market down again. So, peace. I'm going to hop on the live trading session with the team now on Discord. For those of you that don't know, we still have 14 days free trial running for the Discord. All you got to do is learncompoundgrow.com, click on the Discord tab, and you'll be able to get 14 days free to trade live with us every single day of the week. So if you haven't taken advantage of that, go ahead and do that. And we'll see you on the trading floor. Peace.